Recently, the IRS has announced the opening of the 2026 tax filing season. My name is Tyrell Spradley, and I'm an enrolled agent here just to share a few business tax updates. Business tax returns will start being accepted January 13th. This is the perfect opportunity to meet with your bookkeeper or accountant to make sure that your 2025 accounting records are finished and ready to be forwarded on to your tax professional. There were tax law changes effective for this tax filing season brought on by the One Big Beautiful Bill Act, commonly known as OBBB. One of these changes is bonus depreciation. The latest tax law changes restored 100% bonus depreciation for qualified property acquired and placed in service January 20th, 2025 or later. And as well, this tax law is now permanent. Another change is domestic research and development. New tax law allows you to deduct 100% of expenditures starting January 1st, 2025. Previously, these R&D expenditures needed to be capitalized and amortized over 5 years. In certain circumstances, if you have been capitalizing and amortizing R&D expenditures from 2022 through 2024, you may be able to expense that unamortized balance in 2025. But wait, this is where you need to talk to your tax professional to see if these circumstances apply to your specific tax situation. The last business update I would like to touch on is the Qualified Business Income Deduction, also known as QBID. Traditionally, this is for sole proprietors and pass-through entities, which is your S-Corps and your partnerships. Sorry, C-Corps do not qualify for QBID. That allows you to take a 20% business income deduction on your tax return. We won't jump into all the technicals. There are a lot of different nuances, but again, this is the time that you talk to your tax professional to see if it applies to your tax situation. Now that we've talked about a few business updates, I would like to wrap up this video talking about CPAR and S-Corps. CPAR stands for Centralized Partnership Audit Regime that was brought about to replace TEFRA in the Bipartisan Budget Act. This allows the IRS to audit at the partnership level instead of at the individual partner level. Now there are benefits as well as drawbacks, but you are able to elect out of CPAR on your tax return. Talk to your tax professional first though. Lastly, S-Corps. S-Corps, S-Corps. There's a lot of misinformation being spewed on the internet about S-Corps. One thing for sure, reasonable compensation is a hot button with the IRS. Reasonable compensation is when you're taking a reasonable salary from your S-Corp for the services you're providing to that S-Corp. This, along with all the other things we discussed on the video, are not tax advice, but mere information for you to start a conversation with your tax professional about your specific tax situation. I would like to thank you for watching, and I look forward to seeing you in the next video.